Okay, moving on now to corporate earnings. For Fino Payments Bank, Q4 turned out to be a good quarter. Rishi Gupta, Managing Director, CEO, is now with us. Thank you very much, Mr. Gupta, for joining in. So you delivered on your revised guidance of 25%. At the start of the year, it was 20% for FY25. You upped it during the course of the year to 25%, and you managed to deliver on that in terms of a top line. Now for FY26, what are you guiding?
So right now, good morning to all your viewers. So for 24-25, we have said we'll do a 25% growth, and we have been able to achieve that growth for 24-25. For 25-26, we have not put a guidance number right now as such, but looking at the momentum, we see a healthy growth in 25-26 as well, compared to what we happened in 24-25. We also have to factor the fact that the base has also substantially grown in the last couple of years.
So you're not giving a guidance for FY26?
Yeah, right now we are not giving any guidance for 25-26, but we will come back at the appropriate time.
Why? You typically give a guidance. So what's stopping you this time? I understand the base is bigger, but that may affect the growth rate.
So our guidance have been, like we were used to say 20% earlier. In 25, we said 25%. At 25-26, right now we say between 20 to 25% is something which we are looking at. But
Okay.
To get a better exact number, it will take a little bit more time because there's a lot of changes which is happening in the ecosystem as we speak.
Can you talk about that and why you fear that might, I mean, how will that impact the way the growth pans out for the company?
See, we have grown substantially in the last year. We have seen a big growth happening on the digital side as well as on the CASA numbers. And the base itself has grown substantially from our opening numbers in 23 for CASA and 24 for digital. To grow on top of that, we have to add more products, which we are in the process of approvals, as well as some getting rolled out in the next 1 or 2 quarters. So looking at the growth of those products and looking at the approvals which come in our way, that is where we said we need a little bit more time to come at a more firm guidance, so to say.
Right. Good morning, Mr. Gupta. Thank you so much for joining in. This is Vinnii this side as well. What I also want to know, there was some persistent weakness that we saw coming in on the micro ATM side, certain issues on remittance business as well. So why is it, still continuing? Do we expect this to still continue and going forward as well? And because we're seeing a decline, QOQ, YOY, whatever you compare. So what are we watching out for?
Yeah, you are absolutely right. Actually, as a company, we have moved from a more of physical company to more digital company. Nearly 50% of our revenues are coming from UPI and related digital products. The physical ecosystem has come down in the last couple of years, mainly because of remittance as well as micro ATM. We have also seen a lot of customers who used to come to our platform to do such kind of products have now become our own customers, and we see that revenue shifting from transaction to more ownership revenue, so to say. So part of the shift, which part of the decline is because of the shift of customers from transaction to our own customers. Part of it is also because of the ecosystem change and some regulatory changes which have happened specifically in case of remittance in the last 6 months. So we expect that the numbers of Q4, which is there, largely to be there for the full year as such for 25-26.
Mm-hmm. Also, just want to understand in terms of your margins, what are we expecting there as well? What is it that we watched out for in terms of Q4? Seems like overall margins somewhere were at 12.95%. From here on in FY26, what could we expect?
So when we look at the net revenue margin, that is something we keep on giving guidance around. It's been around 30 to 33%. And we expect that the net revenue margin will be in the same range. Even for Q4, it is around 31.5. So it's in that range. We'll continue to be that range. Our PAT numbers have been, PBT numbers have been around 6%. And hopefully we'll continue to be in that 6% range. And maybe as we go forward with more of our ownership products, the margin should go up.
Mm-hmm.
Mr. Gupta, one more thing which is important is that in the last couple of years, we have done large capex on the IT side, which has impacted the depreciation as well as the operating cost or the OPEX on the IT. So that is substantially increased in the last 2 years, 3 years. And we expect that momentum to continue because a lot of IT spend is actually being done on the back of the digital growth, which we are seeing.
I think CASA is now, what, 24-25%?
CASA, if I include the liability income, which is the treasury income on the CASA deposits, is about 30% for the full year and 31% for quarter four. And we have seen a substantial jump on the CASA overall revenue by 42% in 25 over 24. And similarly, digital now contributes to nearly 21% of the overall revenue. So between digital and CASA, more than 50% of the revenue is coming in 24-25.
And how will these numbers trend going ahead? So CASA currently is about 31%, and digital is 24%.
21%.
Sorry, 21%. I know, yeah. So your own expectation on these two?
My own expectation is that between CASA and digital, we should be somewhere between 55 to 60% for the full year in 25-26.
Okay. Mr. Gupta, I just have one doubt is in terms of why we stopped giving those debit card spend details that we used to see coming in before as well. My colleague has highlighted it, Abhishek. So I just want to know what is it in terms of why is that missing, as well as overall in terms of the sustainable run rate for growth in terms of spends also, like you were talking about previously. So what is that we could expect in FY26?
So you are absolutely right. In fact, if you look at ecosystem, you look at our own way we do deal business, we have stopped using debit cards to a large extent. Everybody has moved to UPI. So if you look at the UPI P2M number, which is just flashing it on your screen right now, we'll see a substantial jump, nearly a 2x number for the full year compared to what was there in 24. So debit cards in particular or in general, the spends have come down. People have moved to UPI now rather than debit card. So debit card volumes have not grown, but the number of cards issued have grown, but the usage has not grown to that extent because of the shift on the consumer behavior from debit cards to UPI. There is no other reason.
Mr. Gupta, we'll leave the conversation here. Thank you very much for joining in, and we'll await that official guidance for you. We're used to those structured numbers, so we'll await that. Thank you very much for joining in. But the company, in a way, is saying 20-25% growth is sort of sustainable. But we'll slip into a break on that note. As we do that, some good news for all our viewers, because India's business news leader is now just a click away, introducing CNBC-TV18 all-new app. Get instant access to breaking news, our articles, financial world updates at your fingertips. Don't wait. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen.